Hi everyone, Light Forex Broker Trading Educational Session. We're back. I'm Cuzin, and today I have a very special one for you guys. This is probably one of my top favorite topics in the technical analysis space. I'm referring to one of the most popular and famous technical patterns, the head and shoulders pattern, right? The head and shoulders reversal pattern. Now, you probably have heard of it or even use it on a very daily basis, but I have to say this. From my experience, I figured out that most traders, most investors, I would say 90 to 95% of them, are handling the head and shoulders pattern in the wrong way. They don't use it properly, which leads to bad trading decisions, and ultimately to losing money. So this session is going to be all about the proper use of head and shoulders pattern, how to successfully and consistently trade that pattern, that reversal pattern, and I'm going to show you 4 very interesting case studies, but I'm going to touch in different markets. So we're going to take the Litecoin for from the cryptocurrency market. I'm going to show you from the commodity markets. We're going to see the oil. And we're going to take a couple of currencies from the foreign exchange market, so you can see it's basically crossing markets, right? The head and shoulders pattern. If you're ready, let's go ahead and take a look. Alright guys, so here's how we're going to do it. I'm going to start with 2 past events that took place in the past, right? Then I'm going to take you into 2 present events, which means you're going to be able to draw some real value off of these 2 case studies. But first I want to start with the Litecoin from the cryptocurrency market, because here I want to show you what is the wrong way to identify head and shoulders pattern and to act upon that. That would probably, if you can avoid that, what I'm going to show you here, this is a common mistake that most traders do. If you can avoid that, you can save yourself from probably 70% of bad decisions. And that's huge, right? So, check out what happened around September, right? And it was very visible, by the way. I mean, the head and shoulders itself. Price was coming from below, right? And at some point, it started to generate this top, right? This high, coming off that high with the low, and then visibly determining a higher high. Then of course it was coming back down again, and then a slightly upwards, what seems to be a classic head and shoulders pattern. Now this is the wrong way to measure a head and shoulders, right? Because you cannot rely on your sight. This is very important key. I mean, obviously this head and shoulders pattern did work eventually, right? It worked pretty well. I mean, the direction of the trend definitely shifted and reversed. Having said that, it doesn't mean that this is the right way to do it. It's still the wrong way to do it. And even though I knew that, it may be, this is a false pattern, I still knew that there's a very good chance that price will still reverse, right? And that's actually what happened. But let me show you why it is the wrong way to use it like this, because visibly speaking, it's pretty obvious, right? We can see, the left shoulder, the head, and the right shoulder. However, here's what you should do. And I'm going to pull out just a Fibonacci retracement tool. And what I would like to show you is what I do whenever I spot the left shoulder and the head beginning to emerge, right? So the condition, this is a very, very important condition. If you want to, it only depends on if you want to push higher, much higher, the probability of your success with this. Because obviously you can approach with this simple head and shoulders pattern, but that would only give you around 45 to 50% success rate. And that's not what you're looking for. You're looking for the success rate that reaches the areas of 75, 80, 85%. And that's what I'm going to try to suggest to you right here. So here's how you do it. You take the left shoulder from the very top to the very bottom, and you apply the 1.236, all right, which is the first level right here. Price tag 6606, right? This is the first, this is the very, probably the most important Fibonacci projection level, 1.236, all right, also known as 123.6%. And it is 123.6% of the left shoulder. What you want to have, right, for a genuine head and shoulders pattern that will give you, that will bring about 80% success rate, sometimes even higher than that, I should say. You want to have the head, right, surpassing the 1.236. Not only surpassing it, you want to make sure that it closes the bar above that level, sticking out, and only then coming back below and starting to generate later on the right shoulder. You see what I mean? And here you can obviously see the head was not, the tip of the head did not surpass that 1.236, which makes it a sketchy pattern. Even though it did work at this time, I can assure you on 50% of the time it doesn't. Because what happens later on, let me show you actually what does happen. Since it did not pass the 1.236, by definition it means that it is a trading range. It's a consolidation. It's not a genuine head and shoulders. Because head and shoulders, what it does represent, it represents a shift in trend. Right? We had high, and then we had higher high, which is the head. But then we had a lower high for the very first time. But what it is, it's an upside trend turning into a downside trend. By the way, it's all true with regards to the opposite direction, right? This is what we call the inverse head and shoulders pattern, and we'll see an example for that as well. But anyway, back to the point. This is very important. Because if the head did not surpass the 1.236, it means, by definition, that we are in a trading range. And what you see is merely optics. Right? It just happens to be that the head is a bit higher than the left shoulders. But what you actually see here is just a sideways movement. And what in most cases will happen is you'll think that you're looking at the right shoulder, and you'll place a trade, right? A short trade in this case. But what will actually happen is another upside move and another downside move, because price is just trading sideways in a trading range. And obviously you will be stopped out because you'll place your stop loss level a bit above the right shoulder, as it's suggested from the literature, right? By the way, this also should be something, I should also say something about the stop loss level. They all, the literature suggests that you should place your stop loss level a little bit above the right shoulder. I always place my stop loss level far, far above the right shoulder. I give it a decent distance. Sometimes I'm actually right at the tip of the head, because I'm so far from the right shoulder. Because sometimes the market is nasty. It will send a spike. You can actually, you know what? It actually happened right here. Take a look. It will send a nasty spike just to take the tip of the right shoulder, because that's where all the stop losses are, right? Because if you go online and you search for head and shoulders pattern, that's what they teach you. So obviously there's a massive amount of stop loss levels, and the market is just like a magnet. It would just goes and take them. So you got to place your stop loss level far above that, right? And you can see that spike right here, taking that right shoulder, but basically continuing on the downside. Nothing had changed. That was just noise. So there you go. Anyway, so here you can see, basically, obviously, I mean, price did turn around and started to go downwards, right? Whenever that happens and, the pattern breaks out, that is where you take it to the next step. Right? Obviously, you've established a position, in this case a bearish position, and you want to know how far will it go, right? How low will it go in this case? Which means where are you going to exit this trade? This is the most important question. One once you've established the position. And here I would like to show you another great technique that I use very successfully for many, many years, by the way. What I do is I always measure the head. I take that same measurement you see here. There are 4 levels. Now, if you've watched our last training session, you would know exactly what I'm talking about. I'm talking about the projective key levels, Fibonacci projection key levels. I use 4, right? The 1.236, the 1.618, the 2.236, and the 2.618. Let me show you just a quick look at the actual table where we put the values, right? 1.236, 1.618, 2.236, and 2.618. Alright, so these are the most important projection levels. Once you've established a position, based on a head and shoulders pattern, what you want to do is you want to measure the head, right? You want to measure the head. That's the most important element in the head and shoulders pattern. And here's where the magic kicks in. The 1.236, which is the first level, is always the most important one. Alright, so what I usually do is I approach it with in one of 2 ways. Depends on my mood, basically. I would either take the whole position out once it hits the 1.236, right? As you can see, I mean, you can actually see the reaction of Litecoin to that particular level, right? It completely broke the negative momentum. Price, in fact, turned around. And it was pretty nasty on the upside with that spike, right? But what I did here, I pulled out completely. Sometimes I will wait to see if price is continuing to break through. And then I will keep, if I'm looking at the chart, right, live, I will wait. If I see that price begins to turn around, right, spikes a little bit, begin to turn around, I will pull out completely. Sometimes I take a different approach. I take most of the position out, like 70% or 80% of the position out. I leave a small portion for the rest of the way because I'm mostly focused on the 1.618. Even though I said that the 1.236 is the most important one, it's the most important one because it's the closest, right? It's the closest one. However, the 1.618 is the stronger key level, actually. Is the more profound, right? The 61.8, that's the golden rate. So I always try to aim at the 1.618, right? That's my main price target. But I take extra cautious on the 1.236 because price can definitely change direction completely from the 1.236 and never reach the next one, right? So what I did here, actually, that's an interesting story. I had a short position on the Litecoin, and I pulled out completely when it hit the 1.236 because I saw price begin to turn around. So at first I got out 80%, and then I noticed that price was starting to turn around, and we had a positive day. I decided to pull out completely and come back later on. That's something that I really like to do, actually. So, and I did get back in because it was easy to get back in because what I had here, actually, I had, I had a neckline, right? I had a neckline connecting the 2 shoulders. Now, I took under consideration that it's a sketchy head and shoulders pattern because it didn't meet the conditions that I just laid out. Anyway, what it did do was come back, right, and beautifully spiked that neckline and quickly bounced off, right? The bounce off, this is the important part, and began to turn around. This is where I took action and basically re-established a short position, this time aiming straight to the 1.618, which was at 46.88, and guess what? It was taken out yesterday, just yesterday, right? So this is a very recent and close to heart case study on the Litecoin. But like I said before, like I said at the beginning, this is the wrong way to use it. The reason I still established a bearish position on this one was not only because of the head and shoulders, I had other supportive elements that led me to believe that this one is going to go down. But if you're going to rely only on the head and shoulders pattern, which is not too smart in general, you want to have, other supportive elements. But if you're going to use it as a standalone pattern, that's the wrong way to use it. Let me show you the right way. For this, I'm going to switch to the crude oil, right? The crude oil. Just a couple of days ago, I've made a very interesting market analytics video on the oil. If you haven't watched it yet, go ahead and take a look. Really interesting stuff. But here I also wanted to show you a past event, right? I said I'm going to show you two past events, and then I'm going to show you two relevant, recent, present events that you're going to be able to take some value of. So in this case, I want to show you the opposite head and shoulders pattern, the inverse head and shoulders pattern. And I'm going to take you to around August, a few months ago, where price of oil was trading in a massive trading range. You can actually see the symmetric setup that I have here. This black system, those black 4 lines that pinpoint that trading range. I'm going to show you this was the downside leg followed by an upside leg and another downside leg. However, this particular downside leg started roughly in July. It actually formed the left shoulder. That's how it started, and then I saw the head. But I didn't, at that time, I obviously didn't know it's going to be a head and shoulders pattern. Don't get me wrong. You cannot identify the left shoulder up until you have the right shoulder starting to, being constructed. Only then you can spot, you can identify that you have a potential head and shoulders pattern. But what I did see was that price went all the way to the lower section of my symmetric setup here, right? Reached the lower section, which is this section, penetrated the mid-low key level, which is a very important and strong key level, and then went back above it, crossed back above that level. That was a very important moment. So just from this point alone, and I'm not talking about a head and shoulders pattern at all, I'm just showing you how I can use other supportive elements combined with the head and shoulders pattern to give you an explosive setup. Really, really explosive setup that you can reach probabilities of 90%, 90 and even 95%, right? And that's exactly what I'm about to show you. So, I was mostly interested in the fact that price crossed back above 65, 61. But then I noticed that price was starting to form the right shoulder, right? The right shoulder. So I had basically at that point I basically understood that I'm looking at a head and shoulders pattern. I definitely saw the left shoulder followed by that head, and this is a classic. Let's take a look, by the way, if that's yeah. So you can see, I'll give it a different color here. Let's give it just a purple here so we can differentiate. Remember the 1.236, right? Take a look. This is exactly what I mean. This is a genuine head and shoulders pattern with a very high probability attached to it. Very high probability of success rate, right? This is the first purple level is the 1.236. You can see how it decisively closed below that level. So that's not a trading range. That's a genuine head and shoulders pattern, right? Okay, so when I noticed the right shoulder, by the way, I always like to have a natural key level as the neckline of the head and shoulders pattern. Whenever that happens, that is superb, really superb. That means that you have a very strong head and shoulders pattern with very strong implications. In this case, this is pretty much what it was. I saw the mid-high key level here of the symmetric setup 70.61 as kind of the head, kind of the neckline, right? It connected the right shoulder Not quite the left shoulder though. However, when I saw price was engaging with that key level from below, right at this point here, and then crossing above, take a look, breaking above, I knew that the head and shoulder is going to explode, right? And what's the next step, right? The next step is immediately establish a bullish position and then, of course, measure the head, right? Measure the head. Now, in this case, I was looking for the 1.618, right? The 1.618 right here at 73.62. As it reached that level, 73.62, take a good look. It looks like it actually crashed it and went up, right? Surpassed that level. But it just looks like that because the daily chart is very noisy. If you want to filter out noise from the daily chart, you take it to the weekly or even the monthly. And let me show you, I'm going to show you the monthly chart. It's very interesting because what I'm trying to say here is that price didn't really surpass that 1.618, which placed at 73.62. It actually, it only seems like it did, but it didn't really. And why do I say this? I'm going to show you. Take a look. Remember, the level is 73.62, right? Take a look at the monthly chart. Alright, you can already see what I'm talking about, right? 73.62, there you go, here it is. It was a huge spike which came back all the way, right? This is just amazing. Price was never really closing above that level on the monthly perspective, and that's the highest authority, right? If there's an authority you want to listen to, it's the monthly chart, definitely. Which means that it didn't really surpass that 1618, which is why I said very interesting stuff, right? Anyway, I just want to show you a few tricks and techniques, you know, that I use on the head and shoulders pattern to successfully trade on this, because it's a powerful trade. It's a powerful pattern if you know what you're doing. Now let's take a look at two present events, right? This time from the currency market. Alright, this one, I love this one because I'm heavily involved with the New Zealand Canadian dollar. I have a big position. It's becoming big. I started, I'm counting here almost 300 pip. I've entered at 87.15 and I'm very close to 300 pip. I've entered with a small trade at first and then I've built it up, kept building up the position. At this point it's become pretty decent sized position. And I'm aiming at, whoa, alright. So my price target here actually comes from a symmetric setup. But I want to focus on the head and shoulders pattern that was, in this case, a supportive element in itself. So I usually don't rely on a head and shoulders pattern per se, right? I actually use it as a second degree technical layer. That's how I call it. It's a supportive element from a second degree. I actually have sometimes even third degree elements. But the head and shoulders pattern is definitely a second degree element, supportive element. You can rely on it solely on a head and shoulders pattern, but it's better off to have another supportive element. But I want to focus on the head and shoulders here, right? Because that's the purpose of this session. So forget about the fact that price came from above, that was a downside trend, and it reached a key, very important key level and began to turn around. That's actually that's how I became very much interested in this case, you know, in the first place. Because I've noticed that price reached a very important, you know, kind of the last line of defense, so to speak, key level, and wasn't able to break through. Instead, it started to turn around. So I said, all right, we got something here, right? And then I noticed that, you know, price was beginning to generate a right shoulder. That's always how it starts. And I also noticed that the head was massive if you compare it to the shoulders. So with regards to, you know, with relation to the shoulders, it is massive. And it's pretty important. The further you got the head far from the shoulders, the better, right, the better. It just means that the probabilities for an actual reversal are higher. This is important stuff, guys. This whole trading game is all about probabilities. You're never going to hit that 100% bulletproof technique, tactic, strategy, whatever you name it. Never. But it's always about reaching those high numbers of the 80 plus numbers. Alright, so I'm talking about that as a So I'm talking about that as a left shoulder, right? That was the massive head. Take a look. And the right shoulder right after. Now, obviously, the head is really, really far, right, from the left shoulder. There's even no need for me to place the 1.236. It actually surpassed the 1618. And it came back and it began to build up the right shoulder. So, I usually begin a trade. I usually establish a trade, well before it actually breaks the neckline. Sure, I mark the neckline, no problem. You can place a neckline, and usually I do it with a trend line, not a manually drawn line, but an actual trend line. But I always like to start before the breakout itself. I like, to actually cheat a little bit and to take a few pip. And you know what? You can actually do it pretty easily. But only if you use that technique of the 1.236 to make sure that the head is a genuine head and the pattern is a genuine pattern. If you do that, you'll avoid 70% of, visible head and shoulders pattern, which will be bad, right? They will end up trading ranges and you will be stopped out. And this will allow you to go only with the good head and shoulders, which actually break, which actually fulfill their, their perspective. So what I like to do is whenever I spot the right shoulder under construction, and when I say under construction, I mean that I see the, I actually see the low, right? The low being determined by the right shoulder. And then I see a visible turnaround. For a visible turnaround, I require at least 2 consecutive positive days. I say days because it's a daily chart, but if it was 4-hour chart, I would say 2 bars or 4 hours, right? That's the minimum requirement. Once I see that, once I have 2 positive days, right, after I start to assume that this is going to be a right shoulder, and sometimes I begin to establish very small position, very small, because it's a risky area, right? It's a sketchy area. As it breaks above that neckline, and take a look at that break. That's usually what happens, by the way. That's where I begin to load up more and more and more until I hit the 1.236. At this point, I take some off, right? Probably 80%. But if it comes back up, I will bring up the position back to a bigger size. I will add up again. But I will take it to the 1.236, and then I will either close it or leave a small portion for the rest of the way to the next one, 2.236, or another option, I will close the position as it hits the the 1.236, and I'll wait. And if price can prove that it can overcome that level with a daily close at least, I will start to establish the position again, re-establish it, start small, and if it continues to break away from that 1.618, I will increase the position. And we'll keep increasing the position until we hit the next target, 2.236. And that's exactly what I'm doing right now with this one, New Zealand Canadian. As I promised you, a relevant case study that you can actually do something about right now. Okay, I owe you another one. I owe you another one, also one that I really like. The dollar versus the Canadian here. Now this is also we got a lot of inverse head and shoulders. Just happens to be another inverse head and shoulders, And you know, this one I don't have an active position right now. On this one I don't. I was, you know, it's hard to, you know, to work with all the opportunities because sometimes there are many and you have to focus on the best ones. I mean, you can't take them all. You don't want to do it. You don't want to overtrade, right? But definitely those opportunities that I'm not involved in because I'm booked with other positions, I always keep in a watch list. So I keep track on those. And this one is coming straight from my watch list. Actually, I would like to take action on this one, but I'm waiting for the right moment to strike because I think right now price is a bit too high from a local perspective. From a local price action perspective, it's a little bit too high. I would like it to pull back a little bit and then hit the nail right on its head. And I'm talking about a bullish position. Because what we saw here, I think what we saw here, arriving from that head and shoulders pattern was a full-fledged upside reversal. I'm talking about the major trend. Now, at least the medium-term trend, which is, you know, big enough for me to, you know, a medium-term trend, we're talking about weeks and up to a few months. Major trend, we're usually talking about a trend that lasts for a year and up to 2 or even 3 years. In this case, it would be more appropriate to refer to it as the medium-term trend. So the medium-term trend, roughly from June 2018, was on the downside, right? Take a look. Lower low, lower high, lower low, lower high, right? And lower low again, and lower high. But that was pretty much the end of it, right? This here, right here, that was the left shoulder, followed by a head, which also, as you can see, passed the 1.236. If you don't believe me, then let me show you. I can prove it. There you go. You see, it closed below the 1.236. That's exactly what I want. That's the basic requirement. But obviously I go back to the head. I do this only after I spot the right shoulder. Let's be honest here, right? We never identify the head and shoulders pattern by the left shoulder and not even by the head. It's always the right shoulder that leads us to start look backwards and see the head and the left shoulder, then measure the head with relation to the left shoulder, make sure that it's a genuine one, and then you can take action. Let me show you what I did here. I noticed that it was a genuine head and shoulders pattern, right? I noticed that the right shoulder was starting to construct. And then of course, there was in this case, you know, usually we have massive breakouts, but sometimes the breakout is very small and light, but it's still a breakout. I mean, let's put a neckline here. This is the neckline. That's what's supposed to be the neckline. Take a look. Right? I'm talking about that red trend line. This is the neckline. And what I found to be interesting, take a look how deep that move, that counter move went. I mean, it started by a very light breakout and then a strong, very strong and swift move on the downside. Take a look at that spike, nasty spike. I mean, it didn't take the base of the right shoulder, but it was pretty nasty, right? Very quick. And then from that point on, price went back and established itself above that neckline and never looked back, right? Never looked back. I mean, it did challenged it a little bit, tested it, but that's something that you will always find, really, like 60-70% of the time, price comes back and tests that same neckline it just broke. That's actually a good thing, because what I call this reconfirmation. When you have price touching base on the neckline, unable to break below, starting to turn around, that's very good. That's reconfirmation. You should gain more confidence about that and increase the position, put the pedal to the metal, right? Anyway, so yeah, I used that 1.236 to take some profit off it. You know, once you do that, at this time, as you can see, take a look at this one. It's very close, right? So if I was to enter right here after it broke, I would use the 1.236 in this case, not to take out most of the position, but to take a small portion of the position. So here's another element that I incorporate into my decision-making process. How far is the 1.236? If it's too close, there's no point on taking out most of the position. Unless, of course, price begins to turn around completely once it meets the 1.236. At that point, you will have to split, right? But in this case, it's heading towards the next one, the 1618, right here at 1.3267. It didn't reach it yet. It did not reach it yet. However, it will. I have a strong feeling it will. What I would like to do is to get in a better price. I think in this case, price may actually dip a little bit and try to challenge that same 1.236 level, this time from above. And if it can do that and begin to turn around, this is the spot I would like to pick. Right? This is the spot I would like to establish a bullish position and aim not only at the 1.618, I would use that only for partial execution. In this case, I would aim towards the next one, the 2.236 at 134.52. Alright guys, so that's pretty much it with regard to the head and shoulders pattern. I can see that price already starting to come off a little bit. Hopefully it could reach the 1.236 in the next few days or so. I will definitely follow up closely and wait for the right moment to strike, to pull the trigger, so to speak. Anyway, that's about that for today, for this particular session, trading session, the head and shoulders pattern. Hope you enjoyed the session. I sure did. And we'll see you on the next one. Bye bye.